Central banks strike hawkish tone. With the markets closed on Monday, it's been a shortened trading week with relatively no news. The markets have been reacting, or even overreacting to the Fed governor's speeches, which have been mostly hawkish this week. Most notably was Fed Chairman Powell, saying rate hikes are coming later this year. Then came the Fed's Raphael Bostic, who said we shouldn't expect rate cuts through all of 2024. That changes the narrative quite a bit, and could put pressure on stocks in the near term. What will start driving the market again next week? It's looking like the S&P 500 will have its first down week since May 12 of this year. That's an impressive run and shouldn't be a surprise to see the major indices take a break. Next week could see some volatility return back to the market as we will see the latest core personal consumption and expenditures report. That is the item that is closely monitored by the Fed to help them determine if inflation is under control. What remains to be seen is if the rotation into defensive stocks, as shown below, will last longer than 5 days. Why is consumer discretionary at the top of the board this week? It may come clearer after we look at the trade of the day. Amazon, AMZN, is in the consumer discretionary sector and helping push it higher. It's important to note that the company is getting sued by the Federal Trade Commission for deceptive practices around their Prime service. In short, the government would like it to be easier for consumers to unsubscribe from the service. If you can one-click subscribe, the government wants a one-click unsubscribe option. But this reminds me of so many lawsuits brought against big companies like Microsoft, MSFT, that seem like nothing more than a blip on the radar. This lawsuit isn't meant to harm Amazon, and I think this will likely blow over and Amazon will continue higher. With the VIX being so low, this is a time when you can buy options for a relatively cheap amount compared to historical volatility levels. You can buy a diagonal spread by purchasing the 15th of March, 24, $130 call, and then to offset some of the cost of the purchase, you can turn around and sell at the 28th of July, 23, $136 call against it. It's the same as a covered call, but you're buying a call option rather than buying 100 shares of stock. Since a call option gives you the right to buy shares, this is a synthetic way to place a covered call trade, using less capital. You can buy this diagonal for about $13.10, $1,310, per spread. Buy plus 1, diagonal, AMZN, 100-15, MAR the 24th or the 28th of July 23 and 130-136 call at 13.10 LMT mark. The exit strategy depends on how long you want to be in Amazon. With a long-dated call option, you can roll your short call against the long call until you get closer to March of 2024. Or, you can get out of Amazon if it makes it up to $136. If Amazon closes at $136 on July 28, you can make about $578 on your initial investment. Watch for some potential resistance coming and be ready to exit the trade. Your profit will vary depending on how long it takes Amazon to get to that $136 level. Have a good weekend, everyone. If you have any questions, comments, or anything we can help with, reach us at any time. For more information on this story and others like it, visit tradersreserve.com.